Hello and welcome to all of you in my channel Blue Chip Finance, and in this video we will discuss about the question of accounting ratios, BCom 2 paper 2016, Punjab University. So let's move to the question. Following is the balance sheet of Ghulam Rasool Limited as on 31st December 2014, in which sales is rupees 1200,000, gross profit 20% on cost, and calculate the following ratios: current ratio, liquid ratio, another name of liquid ratio is quick ratio, stock turnover ratio, and debtors turnover ratio. So here is the data, liabilities, and assets. So this balance sheet extract is given to you for solving these ratios. So current ratio is equals to current assets divided by current liabilities. Liquid ratio is equals to liquid assets divided by current liabilities. Stock turnover ratio and debtors turnover ratio, we already calculated these two ratios in previous problems. So let's start to solve these ratios. So first of all, here we need current assets and current liabilities. So current assets, as you are seeing, that stock is 240,000, sundry debtors 180,000, cash at bank 45,600, and prepaid insurance is 14,400. So just sum all these, and the sum is 480,000. So current assets are 480,000, whereas current liabilities are sundry creditors, provision for taxation, and bank overdraft. Sundry creditors 300,000, provision for taxations 20,000, and bank overdraft 160,000. These are all those ratios. Those are payable within 1 year. So that is why these are called current liabilities. So current liabilities are also 480,000. So simply divide these two and ratio will be 1:1. After that, liquid ratio, to calculate the liquid ratio we need liquid assets, and liquid assets are equals to current assets minus stock minus prepaid expenses. So current assets we already calculated 480,000, and minus prepaid insurance and minus stock. Stock is 240,000 and prepaid insurance is 14,400. So just subtract these two out of current assets, and liquid assets are 225,600 and current liabilities are 480,000. So simply just divide these two and liquid ratio will be 0.47:1. Next, stock turnover ratio. Stock turnover ratio is cost of equals to cost of goods sold divided by average stock. If you have opening and closing stock both, then just add up both opening and closing stock and divide the result by 2, and result is called average stock. But if in the data opening stock is missing, then closing stock are treated as average stock. So as in this case, only closing stock is given 240,000, so this closing stock should be treated as average stock 240,000. And cost of goods sold, here sales is 1200,000 and gross profit is 20% on cost. So which means that this 1200,000 is 120 equal proportions. So if we have one proportion and just multiply that one proportion by 100, we can get cost of goods sold. So here 1200,000 divided by 120 multiplied by 100, and cost of goods sold is 10,000. So our stock turnover ratio will be 4.17:1. Similarly, debtors turnover ratio is equals to net credit sales divided by average trade debtors. Similarly, in the case of average trade debtors, as we did when we calculated average stock, if we have opening debtors and closing debtors, just add up these two and divide the result by 2. But if you have only closing sundry debtors or trade debtors, then simply these trade debtors are your average debtors, as in this case. So average sundry debtors are 180,000, and net credit sales, if credit sales is mentioned in the question, then it's okay, you should take that credit sales as net credit sales. But if there is nothing about cash or credit sales, just take this sales as a credit sales. So simply divide these two, and ratio is 6.67 ratio 1. So this was the question of paper 2016, and in coming videos we will discuss about new questions for next papers of accounting ratios related to BCom 2. So stay touch, stay blessed, and take care of yourself. Thank you.